All right, so we're going to go over, this is Evan Carthy from evancarthy.com. We're going to go over, hold on one second. All right, this is Evan Carthy from evancarthy.com, and we're going to go over a little morning review recap of the markets for what's been happening today. Basically, what's been happening is inflation reports came out. There was the inflation was less than expected, and so the market has just popped off today. Especially, look at the Russell 2000. That's the one we're looking at right here. It is just going insane. Like, it's just popping off big time at over 5% today. This morning when it was over here, it's a little above 3%, 3.5%. I was like, dad gum, that's high. And was thinking about just doing a naked short for it, but glad I didn't, because this thing just is blowing and going. So yeah, Russell's leading the way big time. I mean, it's up over double every single other market on here. So yeah, the Russell 2000 is just killing it. So wanted to see, this is obviously a blowout day if we use the daily extension levels right here. I mean, look at that. There's just complete destruction. It didn't even slow down at the extension levels like it normally does. So, but you get these blowout days every once in a while, and that's definitely what today was. But there was something that I had been looking at, and if you look at the MFI indicator right here, look what's been happening. It has been in the extreme get that out of the way, extreme oversold territory here for several weeks now. 1, 2, 3, 4, 5, 7, and then finally 8th week it popped back up. So what I like about the MFI indicator is it shows you when it's potentially either overbought when it's over here or oversold down here. The problem with it is that it just doesn't tell you when exactly the turn is going to happen. It just be on the lookout for it. And so, because as you can see from down here, it hit and then went down. Gotta get out of there. Went down below it, and then we had a pop up, and then it went to the overbought level right here, but continued going a little bit higher until we had a big sell-off down here. And now we're having a nice little pop up over here. So you can't just take it right when it goes down to the oversold, because it was like right there when it first went down into oversold. So if you got right in, you're hurting big time for it, but it has come back some. But it is getting a pop up out of here though, so that is just one thing that we were looking at for this market. The SP 500 is the same way. It's been oversold down here in the weekly time frame, so it's popping off here. Past going on 3 weeks now. Dow Jones wasn't there yet. Oil wasn't there yet. Oil's actually coming off being overbought over here. That's why we've had this sell-off here. And then the Nasdaq is down here being oversold down here as well. But I mean, look at right here. It first went into being overbought right here, and this is the weekly time frame. This 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 20, 21, 22. I don't know. It's about 25 weeks or so, give or take, 25 weeks when it first went to over bought territory right around here. And then, yeah, we did have somewhat of a pullback right here, and now it seems to be over, and now we're going up from being oversold and popping up. But obviously, this is an uptrend, so, when you have that, the drawdowns aren't going to be as big as the moves up are going to be. So we're obviously, as you can see, in an uptrend right there. So looking at it today, I mean, there's not really a whole lot to say. You can see down here, I just have some retracement trades I'm looking at for it coming back to. Unfortunately, here on this side, there's nothing over here to look for it. So yeah, there's just not a whole lot today. If you're long in this market, you're loving life right now. That's for sure. And there is another trade setup. It's that I'm looking at. It's nothing new, but probably one I will look at introducing and taking. Right now the main one is this retracement trade setup. If you look at my last videos, you'll see exactly what it is. It's pretty easy. It's using Fibonacci retracements based upon an ABCD move. So this one is all you're doing is taking the 4 semaphores, but what you're looking for in the semaphores is, and they just spot highs and lows for it, is a lower high right here and then a higher low right there. And then all you do is draw these channels right here, and it's basically you're creating a triangle. And so then when you get 2 candles that close above or below it, you go that way. So here would be looking to go long. You have 1 close right there. And let me put this on right here. There we go. Here you have the first close long right there, second close long, so then you go right there. And the target you have for it is going to be, as of right now, what I'm looking at is the, let me change that, is the 1.414 trade right around there. Definitely the 1.146, but up to the 1.44. See, it almost hit that and then went up there and hit it right there. So, you know, if it get in right there, you're making tons of points for it. So obviously, you know, that's a cherry pick trade right there. What's that? Don't need that. Get rid of that. And so that's all it is. This uses the 15-minute time frame, and you can use whichever one you want. But this is what I'm looking for. The only thing is, like, I'm pretty sure that in real time, this semaphore, I'm not sure when this would have been created, because usually semaphores, it's a indicator that lagging indicator, meaning it just doesn't form on this bar right here and then it takes off. You know, the bars may have been all the way up here before it gets formed. So it's probably what you're gonna have to do is just, this one will have been formed for sure, but then you just take this, and this one will have been formed, and maybe an orange one, but it doesn't matter. You just use in past 4, so just use the latest low. You know, after this one forms, there's the low. So then you have, there's a close, nope, and then went down, so nope. There's a second one, all right. So then you just go from the low to high, look for the 1.414 right there, and you would have worst entry get in is right there, take it up to there, you know, good 17, 18 points for it. So that is what I'm looking for. Again, though, you know, going back and looking at it from, obviously hindsight's 2020, so it makes it look like it's easy, you know, fixing to be a multimillionaire here within a year doing this trade because it works every single time. It probably doesn't. So when I get into it live trades, I mean, to me, that's the best way to figure out how it works. Just get there live. If it doesn't work, yeah, you lose some money, but you figure out a lot quicker than you do just doing all this back testing stuff, seeing what works and what doesn't work. So here's one, for instance, where it doesn't work, and this is one of the things, when it doesn't work, you have to have a kind of a kicker or a backup plan of what to do and how to get out. So here's the exit. We'll just put a box on there for the top of the exit up here, like up here. That would have been the potential exit at the top of that box right there. And so, you know, what were you looking for whenever you get, there's 4, there's higher high, low, lower low, so that fits criteria right there. So then what you'd be looking for is either, you know, obviously what I just said, either breaking up top right here, closing twice up top, or closing twice down below there before closing up top, then you take a short down there. But since it closed twice up top, there's the first one, here's the second one, so the exit is up here that we're looking for. But that didn't happen right away, and so to be safe for it, I mean, it eventually did. It did go up there and hit it, see, like right there. But I have seen a couple times where, you know, it closes above it, yeah, it makes a little run, but doesn't hit that target up there and then goes off the other way, and you don't want to take that big retracement down. So what I'm going to do is, let's say this was the exit or the entry right there, your first entry right there with that black bars and that candle right there, because there's the first close above it, second close above it right there. So that's your first entry, and you're looking at it going up here. That didn't happen. Obviously, you start going down below. So when it gets pretty close down to this blue line, because I've seen it before, it hadn't touched it for the way this is set up, it gets pretty close, like say right around here or something right there. You get in with the second contract right there, you know, close to it, about right there-ish, something like that. And, you know, perfect entry would have been right on there, which it worked out right there, but it didn't. But you just get in a little bit for it right there. And then you move your exit to just below the entry for right before it. And this is just to be safe, get a little profit and get out, because it didn't do originally what we were looking for it to do, which we were looking for it. Because what you're looking for in this triangle trade right here is you're looking for a pop-up, either a huge pop-up or a huge pop-down for it. And so since we didn't get that huge pop-up, we actually got a retracement for it, gave a little bit, but then came back, hit the 1.146 level, didn't hit the 1.44 level. And so since it hit that, broke all the way back down, didn't do what we want to do. We have to have a way to get out, and this is the best way I've seen to get out is so you get in, right around here somewhere. We'll even say, kind of a worst entry. We'll say at the bottom of that bar right there. You go ahead and get in right there, and then again the best way would have been right down here, but that didn't work out. So going down right here, hit that, and then what you're looking for is going up, and I would like to take it right up to the entry, but I have seen before not go up there and hit it. So say, somewhere just below it, say like, right around there, something like that. You could even put on, if you wanted to, I'll just leave it right there. So you get from there, 12-point gain here, about a 4.5 point loss, say just. So anyways, you'll still be a profit. And that's obviously the goal from every trade is to be in profit, but that's anyways, that's it right there, and that's the kicker and kind of how to get out of it. So anyways, just wanted to point that out for this little recording I'm doing right now for that trade setup, and just look to see what's going in to tomorrow. All right, thanks everyone. Bye. And so, sorry, that's for my video I was doing. So now what now what I'm doing is just seeing what else it could do today. And there's not a whole lot. It doesn't look like it's coming down anytime soon. So the future markets are pretty much done today. Let's look at this. It's fine. And okay, there's the alarm. Oh, this thing is getting pretty close. Ooh. This is getting close to a trade right here. Wouldn't have gotten a hit though. What the high is that? High in that bar is 34,975, and we are looking for 34,983, so not quite there yet. I'm not going to take this one though right here. Although now that I say that, what I'll do, because this thing could end up being an overnight trade right here if it goes up for 3. So it'd be more like a swing trade. So I'd take it first, get up right here. The exit is right there. Keeps on going up, saying 8.6. Then move the exit just below it right down there. So that's what I'm going to do for that one right there, for this one. But probably what will happen, since I've said now I won't take the 50% retracement right here, it will go up there and hit that, and go down and hit 38%. But hasn't hit there yet. Got pretty close, didn't hit it, but it's finding some. First red candle of today, since even before the market opened at 7:30. Well, I guess there's been another 2, but the first one looking like there's actually going to be some resistance up there. I don't think this has anything. No, that would be that. Did this one come down and hit it? Let's see this. There's that. Came over here and hit that. Alright. It did not. Alright. So we can do that. Set. Alright. Let's see what it looks like. Oh, it's still a ways away. Yeah, it's a ways away. That one's getting closer to that one. That one almost hit it. Let's look at oil. See what oil's doing. Oil's popping off as well. It was up over, well over a percentage point. Now it's cooled back some. I'm just waiting for some retracement trades. Come back over here. And yeah, just waiting to see about that. These are all just, look at these. These are all just A, B, C, D moves up here. A, B, C, D, and then so on and so on. A, B, C, D, A, B, C, D, and then A, B, C, D right up there. So just straight movement up. Let's see what that looks like. That's there. That's not it. This may be more of it right here. Yeah, that's kind of the channel right there. Or I don't think that's it. No, that's not it. So if we extend these to the left, yeah, that's the channel right there. So yeah, you can see that's the channel today going up. It has shot up a little bit to the upside. So a lot of times when you see, assuming, this is why channels can be tricky, is when you see it shoot up outside of the top end of the channel, an uptrend, you can usually expect it to shoot down here to the downside. Doesn't mean it's going to completely break down, but you can usually expect it to come back and eventually shoot down the other way on, you know, this move down wherever it ends up down over here, but shooting out the downside of the trend channel right there. But yeah, definitely in a upward trend, and I mean it's kind of the same thing over and over. You have a drop right here. See the drop, obviously. Then you have a base. You can see here's kind of the low that was in. There's the high. You can see rattling around, and then also the trend channel we just shown, which was the rally coming out of that base right there. And then eventually what we'll get is we'll get a base somewhere at the top. It'll eventually, you know, create a horizontal, break the trend channel, and then we'll either have a continuation of the rally up, or we will have the movement down for the downwards trend channel. And those are the only three options, either up, sideways, or down. And sometimes, I mean, sometimes it's not the easiest thing to spot, but here we have, obviously that's an uptrend right there. Uptrend. This basic one's probably harder to see right here. I mean, there's the top of it right there, and then probably all the way something like that was it. Sometimes the basic one can be harder to see. And then we have it going down somewhere like that, yeah, it's a good trend channel down. Then we got the one going up, and then we got the base down, and now it's going up as I just showed a little bit ago. So that's what we're currently in right now. We're currently in an uptrend of the market, and so that's half the battle, is figuring out what the trend is right now. So we're definitely in an uptrend for it. So the easier trades are going to be excuse me, the ones going up to the upside. That's going to be it. And so that's oil right now. Go Nasdaq here. Same thing as the other markets. It's just complete blowout of a day right here. Here's that triangle trade. Oh wait, no, that one went lower. Where was it? There's one I was looking at. There's a Nasdaq. Yeah, like here's one. So it does have something to it. This is interesting. So there you have that semaphore would have been created. That one would have been created. This one would have been created. This is the only one that probably didn't get until right up here, which shouldn't be that big of a deal because if you have three of them, you really need these two. Then all you're going to do, or I'm going to do, is just take it to, draw it to wherever the low is. Like that's the low, and it still hasn't broken the high. And then the low comes down here. Like what time was that at? 5:30 in the morning. So I wouldn't have been taking that trade. Would I have been able to get in 7:15, 7:30? Yeah, maybe. But there's the first break, second close above it, so you get in right there. Draw that, and there it hit right up there, 1.014. So you get in right around there, take it up there, 68, 70 points in Nasdaq. So yeah, that's how that works. I'm completely assuming that when I do take this live, it's going to be a complete failure, though. This is the way it usually happens, is I spot these trade setups I like, I do them, or maybe they work for a little bit, and then I figure out it just doesn't work when you get live into it, because again, going back, just cherry picking the setups is the easiest thing to do in the world, and that's how a lot of people sell their systems. And on YouTube, they go back and show these perfect trade setups and how easy it is. But when you're live in the battle of it, that's what it is, a battle, financial battle, and you're in live with it, your emotions, your fear and greed are just raging inside of you, and you're trying to figure out, should I go long and get in the trade, and you're like, oh, get out now, you've got a little profit, or no, stay in, there's more to be had, or you start losing and saying, oh no, just double down, you're right, and it keeps going against you. Yeah, all those emotions play out. And so that's why I always say the best thing you can do is trade live. Yeah, back testing does a little bit. It does help for you to be able to spot the setups. You know your entry point, you know your exit point, you know what you're looking for in the trades, but then just go live. That, to be honest, is going to save you the most money. You're going to learn the most. But by saving the most money, I mean rather than spending $3,000, $5,000, $10,000 for training programs or someone to be your mentor and train you, just use that money and go live in the market. Trade the micros for it, because I think the E-mini micros is per contract, day trading is $40, Nasdaq's $100. I think Russell and Dow are, I don't know, 30, 40, something like that as well. So for a couple grand, even a couple $100, I'd say at least $2,000 at least. Start with doing it. You can learn a lot, and the biggest thing you have to learn is how to control your emotions, fear and greed. I've been day trading live, oh man, off and on for a long time, but consistently for, let's see, it was before COVID for sure. About 5 years, going on 5 years now. Most days, almost every single day, depending on what work was doing. Obviously sometimes with my main job I can't do it, but when I have the time, I do it just about every day. So yeah, that's the biggest thing to work on is your emotions, and really the only way that you'll never 100% master them as far as that feeling of fear and greed that comes over you when you're either up big or you're down big or whatever. Say you've had a couple losing trades in a row, you always get that little tingle of it, that little twitch of it. But what you do is, once you've been trading for a long time, you've had your wins, you've had your losses, you'll know how to control, or not necessarily control, that's not the right word I'm looking for. You'll know how to deal with the emotions. You'll know what to expect and how to deal with them. And then they hit you, you'll know what to do, because there's been plenty of times I've been in a trade, the fear hits me, I'm up, I'm like, I don't want to lose it, I get out and it goes up even higher. Or I'm down a trade, the greed hits me, I'm like, no, I'm right, this is the right trade, the market's wrong, I'm right. Then I end up losing even more on it. So that's happened plenty of times. So that's really the main thing. That's why I recommend to everyone. And if you need even more leverage, then just go to trade Forex, because you get even more leverage for that one. And so that's a good one. But definitely, if you're just starting out, use the micro contracts for futures for it. Don't use the regular contracts, because you need day trade for that. It's like, I think $400. Excuse me. Contract, you lose a whole lot more real fast. So back when I started trading years ago, oh man, how long ago is this? Probably 2007ish, 8. They only had they didn't have the micro contracts. They just had the standard contracts. And so spent, what was my first trade? I spent $5,000 with that, going into that, learning their stupid system that didn't work, of course, and then another $5,000 going into to day trade live, and having to use the standard contracts, not the micros. Those didn't exist at that point. And so obviously blowing that account super fast, because that trading room doesn't work. Pretty much every trading room doesn't work, in my opinion. And so let's see, the Russell's finally. So anyway, that's my rant about that. Is if you're trying to learn, figure out how you want to trade, what you want to trade, and when you want to trade. And then, of course, go through all the charts, look at them, look for the setups you're looking for, know before you get in the trade, where your exit's going to be, what you want, know your entry's going to be, if you have a stop loss, where your stop loss is going to be. And look that over so you know the trade forward and backwards, you know how to spot it, you know how to get in, you know how to get out of it. And then go live with it, see if that trade works. You'll find out real fast if it doesn't work. And then also you'll be able to work on how to handle your emotions, because that's really the biggest issue in trades. There's really not a setup that is going to be the issue, because every setup can work. You just have to get in at the right entry and get out at the right exit. For the most part, I say most trade sets will work. Like if you had a trade set that told you get in live right here, when it breaks to new high, you get in right there. Well, now you're screwed, because you've been losing. I mean, look at this. You've had that drawdown all the way down here. Whereas say you had the same setup and you reversed it, you said, okay, I'm going to reverse it, do the George Costanza, do the opposite of it, and just short it here at the top, you'd had a good one right there for it. I don't even know what I'm trying to say right there, but basically just managing your emotions, and just know this thing is all about all you're doing is predicting where you think the market's going to go. That's all you're doing. That's all trading is you're saying that, all right, the market's right here right now. I think based upon whatever my trade setup I have, I think next move is going to come down to this level right here, so I'm going to short it and go right there. And then there's someone else out there that says, okay, the market's had a big round up right now, based upon where it is right now, based upon my indicators and how I trade, I think it's going up to that level right here, so I'm going to go long right now. So you're just predicting where it's going, and that's what you'll never see people who are selling their courses and systems use the blank screen of the chart to predict where it's going. They always use what's already happened to show how their system always works and how they make money with it. So, but I'm gonna go get some lunch. I'll be back later today, and so I'll see you later. Bye.